From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, welcome to the COB. This Thursday, I'm Juliette Sarli. Let's get you caught up on what we saw in local market action today. It was a negative session. We started down by about 0.5%, I think, and then we started to see a little bit of more positive momentum, but we have closed lower by around 0.6%, and a lot of the weakness here really coming through from the mining players, the materials sector down by some 1.7% here, and consumer staples, consumer discretionary stocks also coming under pressure, really as we continue to react to news that we have heard from President Trump, but also, of course, we are hearing that the ASX itself could also face some regulatory action. That news just coming through here. The Australian share market operator saying an unprecedented outage of its settlement system on the Friday before Christmas was caused by a problem relating to the allocation of computer memory. Worth noting elsewhere, gold, though, holding near its highest level since October. So all this uncertainty making people fly into safety. When it comes to the overall themes, though, as we mentioned, it was the mining losses today that really dragged the market lower. We also had some news we kind of knew was happening, but it was confirmed with an executive general meeting of Myer shareholders voting overwhelmingly in favour of its takeover of Premium Investments brand apparel business, and Premium Investment shares. Shareholders by proxy had already voted almost 100% in favour of that too. Interestingly, Solomon Lew from Premier Investments, the 79-year-old retail billionaire, now gets about a 27% stake of Myer. And of course, as we continue to talk about when the RBA might cut, what the Fed is going to do next, the Bank of Japan is looking towards a potential rate hike, taking its interest rates to their highest level in 17 years, with that Bank of Japan policy decision looming ahead of us tomorrow, Friday. All right, let's have a look at some of the weakness in those mining players. BHP down by around 2%. Rio, Fortescue, South 32 and Mineral Resources also hurt, particularly by the weakness in iron ore. The retail stocks were actually lower, with the exception of Myer and Harvey Norman, which rose by more than 1%. Premier Investments falling by 0.7% after that vote. And having a look at the tech players as well, mostly weaker there. Xero and Zip looking okay, but WiseTech Global down by 1.2%. Overall, though, that move by Xero, Zip and a few others did boost the IT sector, and that was obviously given the fact that we had the movement coming through from, I guess, what we had seen in terms of the movement in the US overnight with that movement from the AI infrastructure build. All right, I want to have a look at some of the top corporate stories, though. Myer and Premier shareholders, they're overwhelmingly backing their merger. Under the deal, Myer to buy retail chain Just Jeans, JJ's, Portmans, Dotti and Jacqui E, and issue shares to Premier shareholders. Bain Capital, meanwhile, once again upping the stakes in the battle for Insignia Financial, offering to acquire all shares for $4.60 each, and that bid matches CC Capital's offer from last week. Premium shares having a great session after a positive trading update, and Netwealth achieved funds under administration inflows of $4.5 billion for the fourth quarter, 70% higher than the previous period, shares rising by 1.6%. Let's welcome our Thursday guest to the COB, Mathan Somasundaram from Deep Data Analytics. Good to see you, Mathan. We had sort of, I guess, the Trump bump initially. Now we had a day of selling, but I guess it's a lot of uncertainty too, and particularly what any potential tariffs on China are going to look like. Is it just going to be 10%?
Yeah, I mean, it's anyone's guess, right? I mean, we started with something dramatic. We were going to have tariffs on China for trade, and then we were going to have tariffs on China for fentanyl, and now we have tariffs on potentially, at the moment, nothing, but we're going to potentially have tariffs coming on the 1st of February. Interesting that that's coming on the 1st of February because the Fed meets the week before. So we're going to wait and see how it plays out. But the problem is the market expected tariffs and we didn't get it. And then now we've been promised tariffs, but I suspect the market will wait to see how it plays out. So we're in a area of uncertainty, and the market will wait to see how it plays out. So anything could happen at this point.
Yeah, it is certainly a waiting game, but at the same time, the miners being punished, perhaps maybe unfairly, given that a lot of people were hoping that there'd be the great sector rotation in 2025.
Yeah, I mean, we've been hearing that in 2023, 2024, and I think brokers were calling it early 2024 was the super cycle for commodities. Yeah, I don't see that. I mean, we don't see that in the data for China. We haven't seen any dramatic stimulus for the property market. The property market remains weak. They don't look like they're trying to pump the property market, so commodity is likely to remain weak. Now we've got with Trump, you've got EV risk, so most of the EV commodities are going to struggle. So the commodities are at the moment, apart from precious metals and probably energy that's playing out because you always need energy. Everyone else remains weak, and I think it's likely to remain weak. I mean, we're going into February, then you got the Chinese New Year holidays. Nothing's going to happen there, so it's going to be interesting for the next 2, 3 weeks because China will be potentially no action.
What are we seeing then in terms of some of the other sector moves? Retail is lower today, but Myer is going to become even bigger, and Solomon Lew will have a majority stake.
Yeah, well, you don't want to play against Solly Lew. You always come out second best, and I don't think this is going to be any different. But it was a market darling in context with Premier Investment. You kind of got that with, you can see the two best retailers that everyone was playing in, Premier and Lebisa, had a pretty good run, and then we've had downgrades and the stocks are pulling back. So I think the macro cycle is negative, but there's going to be a lot of uncertainty in the short term. It's an interesting way how this will play out. Are we going to see a version of Qantas versus Jetstar with Premier versus Myer? Who knows? We'll see how it plays out. One thing we know for sure, Solly Lew is not going to lose money on this.
Yeah, and I mean, he's a 79-year-old billionaire, so he's doing maybe better than you and I already, Nathan, in that regards. Kind of jumping around here, but just want to go back to the materials space and look at gold, the actual physical gold price, and an 11-month high. It's hard to find anybody that is not bullish on gold given the uncertainty at the moment. Citi, though, downgrading the likes of Evolution. What are you sort of seeing in terms of some value in these players?
Yeah, I mean, it just comes down to what your spot gold price is. I mean, on Aussie dollar terms, I think it's 4,400 odd. Look, it's all-time high. Most Aussie gold miners have all-in sustainable cost probably half that, if not less. So, most of them, they looked like ugly duckling with a lot of debt. They've all paid off their debt. They're all swimming in cash. Um, you know, as much as I would love them to pay me dividends, they're not going to pay dividends. They probably will do acquisitions. So I suspect the sector is going to go into an M&A cycle. There's a lot of cash flying around, and I suspect that's going to play out for a while because one thing we know in the policy uncertainty in the US is that debt is going to blow right past everything. So as debt keeps growing in the US and probably bond yields follow, gold is going to keep going higher because of the hedge against the risk. So in that context, I think gold is in a perfect spot at the moment, and I don't see anything hitting it yet. So, I think most of the stocks, they've had a good run, and it'll be hard for people to buy into. I mean, Gold Road looked in a few operational issues in the last 6 to 12 months. It's now at all-time high. So it just tells you how a good commodity price can change everything.
So with gold remaining very much, the hedge here, and we've seen so much strength in the dollar too, does that necessarily continue, or do you buy into that thesis that maybe the greenback's due for an imminent pullback?
I actually think the dynamics has changed. I think the higher US dollar is going to make everyone it's basically exporting inflation. So US is basically, as the dollar goes up, everyone else's currency is falling on a relative basis, and all commodities are based on US dollars. So costs for all commodities are going up for everyone. And think of us. We are net exporter of gas, but apart from Western Australia, everyone else pays global prices. So we're paying top dollar. So in that context, everyone's costs on commodities and base things like food and energy are all going up. So as US dollar strengthens, everyone has got to get inflation coming to them. So rest of the world is going to see inflation. And despite the high US dollar, US actually has inflation going up for multiple months. So the Fed has turned hawkish because inflation is going up. So I don't think that's going to change the dynamics. We're in one of those weird worlds. We've manipulated it so much that things that are not supposed to be correlated are now correlated. So here we are.
Yeah, and how do you kind of do your job amidst that, Mathan? I was talking to some advisors yesterday saying that if we went back 12 months ago, let alone 24 months ago, and said this is what the start of 2025 was going to look like, a lot of people would not have believed that President Trump would be back in the White House and that we would be talking about a lot of these same thematics again.
Yeah, look, I think the election for us was a 50-50. So there was always a decent chance of him coming. And all the risk categories that we were expecting if Trump got in was higher bond yields, higher debt, higher inflation, higher risk for China. I don't think any of that's changed. I think we're still going to get all of them. And the biggest problem we've got is how are things going to settle down? Because at the moment, we know there's a lot of billionaires in his camp, and they're all waiting there for the tax cut. They've got to pay for the tax cut somehow. So the only way I can see is tariffs. I mean, even tariffs won't pay for most of it, but still, at least you got something. So in that context, to get past the Republican Party in both houses, they need to get some cost saving. So tariffs is the only way. So at some point, they have to put the tariffs. If not, the debt becomes, it goes through the roof. So I think they're going to do it. But again, we kind of know, but we're there. That's the beauty of Trump. We know what he's going to do. The question is how we get there is going to be a lot more entertaining than most of us would want it to be.
All right, Mathan, we'll continue to be here for the ride. Thank you so much, Mathan Somasundaram from Deep Data Analytics. Yeah, you've got to give it to him for at least keeping the media entertained. Well, the stock of the day was Netwealth, Howard Coleman, Team Invest. Grady Wolf from Bell Direct joined Andrew.
It's on a PE of 80, and every year since it's listed, you've been able to buy it on a PE of less than 50. So, do I like the company? Absolutely. Would Team Invest members like to own it? I'm sure most of them would. At a PE of 80, would they be buying it? Nope. But if it gets down to a PE below 50, I think you'll have a lot of them getting very enthused.
It's a fantastic company, second straight quarter of record performance, 4.5 billion in FUA or funds under administration net inflows. So that's what you want to see when we're seeing competitors in the market have outflows at the moment. So with inflows, that's phenomenal business there. We're seeing their growth is really reflective of a catch up in transitioning clients and accounts coming through. So nothing out of the ordinary there, but it's a very strong business. And again, if the PE was lower, I would probably buy him myself, but yeah, I can't justify the PE right now.
All right, let's have a look at market leaders on a down day today. Neuron Pharmaceuticals continuing to come back, 3.5% gain. Regis rising on its trading update. Megaport, Zip and Clarity Pharmaceuticals also looking good. Liontown, so it really was a lot of the miners hit hard today. Liontown down 7%. Evolution Mining hit by that Citi downgrade. Although interestingly, they did up their price target, but they said the fact that Evolution's run 83% so far this year means that they've downgraded it to neutral. All right, let's have a look in the small end of town. Cyclopharm, we're going to be talking to them tomorrow. They had a good day on an update, up 12.5%. MTM, Critical Metals and Premium we mentioned on its update as well, rising 11%. To the downside, again, the lithium players, European Lithium, Core Lithium under pressure, Ioneer Energy Transition and Petrotherm also falling. Tonight, got a fair amount of data out of the US, including those initial weekly jobless claims, the Kansas City Fed Manufacturing Index, earnings from American Airlines and Texas Instruments. Texas Instruments always a very important bellwether for the overall economy, and Donald Trump will be speaking at WEF in Davos while we also get EU consumer confidence. Looking ahead tomorrow, a lot out in Japan. Of course, the BOJ policy rate decision is the key one. And we also get CPI in Japan as well, while Myer locally will be trading ex-dividend. Our first investor event for 2025 happening next week, January 30th. Time to get it in your diary. High conviction, is a selection of the best ideas for this year across public and private markets. We'll have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Registration is free. You can get all the details ausbiz.co/conviction. So a final check on where the market is tracking with the CIBO 200. They're down by 0.7%. The ASX 200 dropping 51 points or 0.6% to 8,378 after yesterday, of course, it set a new 20-day high. Liontown and Iluka, as we saw, were the underperformers. And there was only 2 sectors that moved higher, including IT, which was higher by 0.2%, but certainly weakness from material stocks, consumer staples and consumer discretionary players, keeping us underwater. All right, tomorrow, of course, Friday, last day of the week, we'll be live from 9:45 a.m. Eastern. Join us then.